this is going to be fun. This is the Inaugural Fintech Innovation Challenge. And the challenge has been included in the program to demonstrate Payments New Zealand and the industry's commitment to innovation and supporting the activities of Kiwi startup businesses. Wide range of entries have been received from all aspects of the fintech sector, from data analytics to loyalty to small business apps, which goes to show, I suppose, how hot this industry is. The 5 finalists you are going to see pitch today are competing for, I kind of feel like a game show host, a cash prize of $5,000, mentoring time, and of course, the bragging rights as the Inaugural Fintech Innovation Challenge winner. So here is how it's going to work. It's going to be pacey because we've got 5 to get through. So each of those will have 6 minutes to make their pitch to you, who will be voting, and also to our panel of judges. I'm going to term them dragons. I hope they don't mind. This will be like Dragon's Den. They're then going to have 4 minutes to fire questions at them. So 10 minutes per startup, and there will be a massive timer up on the board that will be counting down, so you'll be able to see when they're running out of time as well. And when they get to the end of their 6 minutes, we're going to hear a sound. That sound will be, oh, that's very gentle. That is an indication that your time is up. And if you continue to talk after that, I'll be coming in to cut you off at the knees. So once we have completed all 5, voting will be open. So that is on the app that you all have access to on your mobiles. And you just simply go into the online polling section. So if you hear one you like, you can vote immediately for them. If you change your mind, you can vote for another. You only get 1 vote, but it will be switched whichever one you vote for last. So voting closes tonight at 6:45, and you will be having the inaugural winner announced at dinner tonight. So something to look forward to. So let's get started. I will introduce you to our Q&A panel to begin with, or our dragons, as I so charmingly termed them. So Mark Rushworth, Paymark's Chief Executive and Challenge Sponsor, Stefan Korn, Creative HQ's Chief Executive, and Cecilia Tarrant, who is the Chair of Archangels, a member of Ice Angels, and Payments New Zealand Independent Director. Welcome to you all. I'm just going to hand over now to Mark, who is going to share his thoughts about the importance of fostering fintech innovation.
So a lot of you are probably wondering why Paymark's sponsoring this fintech event. One, in fact, you probably don't know is Paymark is probably the original fintech startup in New Zealand. Paymark launched back in '89 and, in fact, revolutionised how New Zealanders access and spent their own money. And importantly, it was born from real collaboration between the major banking institutions at that particular time. And they fostered, of course, an approach and an environment that allowed Paymark to be the centre of that world-class digital payments ecosystem. And in fact, we won the war. We won that war against cash. And New Zealand today is still known as the place where FPOS received that widespread support, and we lead the world in terms of electronic payments per adult of population, where other countries still rely on cash and still rely very much on the checkbook. Paymark, unfortunately, is also a very good case study in what happens when you don't prioritise innovation. From that original, truly visionary outlook of how money should be moved around in the late 80s and building that world-class network, we somehow transformed ourselves into a relatively stale utility for the best part of the next 25 years. And of course, the reason, well, FPOS was so good that it didn't feel the need for that continuous improvement. And it wasn't being pushed to change from outside, from its customers. And FPOS processing today is largely the same as it was when we started back in 1989. But of course, all of that is changing, and Paymark has been on an innovation journey very much for the last 2.5 years. We've got very much a new approach to product development, time to market, where it used to be years per product to get a product into the market, is now down to months. And ultimately, we would like to see ourselves acting as a startup, operating and getting products into the market in weeks as opposed to months today. But in order to do that, we've had to do a hell of a lot of work over the last 2.5 years. Really, really difficult, as a number of you know, to inject that culture, that drive of innovation back into the business. But we've been very fortunate as well, having been able to work alongside a number of partners to help us understand what innovation looks like and what true R&D actually is in the marketplace. We asked ourselves, why do receipts have to be printed off and handed over? So we developed a product called Paper that replaces them with an electronic receipt that can deliver straight into the likes of Xero. We've worked alongside ASB, and yesterday we launched and began offering what's called online FPOS in partnership with ASB as a new online payments tool across merchants throughout New Zealand. And as customers' demand moves across into that post-plastic world where our money's moved around via different devices as opposed to pieces of plastic, we'll ensure that we're there supporting switching those different transactions. Now, of course, startups, we're talking about startups today, they're vitally important in this scenario because in an industry dominated by big players, it's very difficult for them to react and respond quickly. Startups are the only guys that can often innovate in that timely fashion, lean, small, and very quick to pivot in the marketplace. And that's why Paymark is here today. We want to see what these startup guys can come up with, what they're doing in the market, and what new products and services they have that we can learn from. But before we dive into that, I just thought I'd start with a test for all of us in the room here. And I'd like to invite the audience to ramp up their support for the eventual winners of the competition tonight. And for those of you that come from a startup background, you know, we all know how difficult it is, that every penny kind of helps. So what I'd like you to do, if you like one of the finalists that you see up here this afternoon, don't be shy. Go talk to them and offer them whatever support you can do to bring their and make their vision a reality. Thank you very much.
Let's get into the pitches. We have our first candidate ready and waiting. The first finalist to pitch is Angie Judge, the Chief Executive of Dexhibit. I hope I've said that right. Yes, got a thumbs up. All right, come on up, Angie. Just a reminder, you can vote at any time. We're going to have 6 minutes hearing from Angie. The buzzer will go off, that little tinkle, 4 minutes from the judges asking questions, and then on to the next finalist. So, good luck, Angie. Your 6 minutes starts now.
Thank you. Hello, everyone. My name is Angie Judge from Dexhibit, and we do something that I like to call Muse Data, but more on that in a second. Our story starts a long time ago, back in 547 BC, and it begins with a princess named Inaugural who built the world's very first museum. And I've always wanted to know how many people would have visited that museum and what would they have made of it all. And we can just imagine our princess with the same questions, and she would have ordered one of her men to sit in the corner with a little pile of stones and carefully count each one out as the visitors walked through the door. Well, fast forward 2,500 years, and technology has completely revolutionized this process in the museum. That's right, folks, it is the mighty clicker counter. You can now find this device in 2 places in the Smithsonian Museum in Washington, DC. It sits very proudly on display in the numismatics collection of American history, and very sadly, they still use it at the front door. And yet, this device represents crucial information that is used to make incredibly important investment and financial decisions in our cultural institutions. For example, the average museum has only a few % of its collection on display at any given time, and it can cost 6 or 7 figures to swap that out. So the ramifications of this device are substantial. And from our experience at Dexhibit, we also know that if you attempt to covertly video a federal security guard in an American history museum using their clicker counter, you can land yourself in a lot of hot water pretty quickly. But it can also seed an idea. And now millions of visitors from our beta site at Auckland Art Gallery all the way through to the Smithsonian in DC are instead analysed by Dexhibit. Using the museum's own network or a third-party hardware accessory, we take mobile device signals to see who's doing what when and where every few seconds. That's over 1,000 data points for a single museum visit. But that's not all. There's even more online, with social media, with commercial transactions, financial performance data, and even what the weather is doing outside. This is the end result. We like to call them the sexiest dashboards in our sector. They present a real-time, personalised view for each member of the museum, because what the director or the CFO or the board want to see can be very different to, say, marketing or curatorial. So you're probably thinking that this sounds like a great opportunity for retail, right? And I'm sure it is. But at Dexhibit, we believe that our pathway to success is very much about global domination in a niche market. This is ours. Every year we see over 1 billion visits in the world's 75,000 museums. That number is more than McDonald's and Starbucks combined. And every one of those visits needs to be recorded, reported, and analysed. Your nearest museum is only 50 metres from where you're sitting right now. And there's another 10 within a kilometre radius. It's just the tip of the iceberg for the wider cultural sector. It all adds up to $698 billion in the US economy. And our vision was to empower the biggest and the best in the museum. So we went straight to the top. And we're now working with some of the most elite brands in this sector. We are already recognised as an emerging thought leader and have literally just got off the plane from an international speaking tour in our industry. We're working with museums from across the US and now in Europe, and we have another 600 in our online Muse data community. These are people as passionate about museum analytics as we are. Now, our business model is pretty simple. We charge only a few cents for every museum visit. It's very sticky, scalable revenue that's based on the museum's growth aligning with our own. It helps us cover our cost to serve, and it aligns for both our software as a service and data concierge as one. To tackle this challenge, we have an exceptional team, 3 co-founders leading a bunch of data-mad developers and data scientists, and our background in telco and fintech is helping us rise to the top. So we may never find out anything more about Princess Inaugaldi's visitors, but you can support us right here in solving this problem for the museums of today and of tomorrow. Thank you.
Well done, Angie, and with about 30 seconds left to spare. So let's start the clock again at 4 minutes. Over to you, judges.
Angie, who are your competition in this space?
We originally thought that we were looking at players like Tableau or Microsoft Power BI, who were also solving the dashboard problem for the museum. But we've quickly realised that we can have co-opetition with them, so that we sometimes compete, but we're also looking at ways that we can partner with them as well. And we're seeing that play out in museums like the Met and the Smithsonian, where they're using multiple products to solve the analytics ecosystem. Right now, we're really lucky that we're one of the few companies who are innovating in the Muse tech space. So it's given us a really good opportunity to get a run on the competition.
Great presentation, Angie. Can you tell us a little bit more about your sales model, how you're actually acquiring the museums?
Sure. We've been really fortunate at the moment. Most of our sales are actually inbound. So from our speaking and from some of the other work that we do in the industry, we're getting a huge level of inquiry. We have done a little bit of outbound, and we do a bit of marketing, mainly that's event-based at the moment. And from there, we see generally about a 3-month sales cycle with a couple of video conferences or sometimes face-to-face meetings with the museum to close.
Just a question, you were talking about using mobile device signals to track instead of the clicker. How do you kind of get coverage across those perhaps kids that don't have mobiles? Do you still need the clicker, or how do you cover the entire base?
Sure. A funny story, really. I was at Auckland Art Gallery with a couple of developers when we first started out, and they were sitting on the couch with their back to the front door. And 10 a.m. opened the museum, all these kids flooded into the museum, and the developers with their backs to the crowd couldn't see it, and they suddenly saw this swarm of data on their screen. And they said, something's going really wrong. There's all this stuff happening in the system, and it was the first day we'd started using it. And I said to them, look around, and behind them was about 300 school kids. There were devices in just about every backpack. And we find 92% of people who walk through the door in a museum are carrying at least one device. And some of our algorithm work and our research is aimed at trying to work out how we can balance that for the total museum population to get a good guesstimate on where they're at.
How replicable is your IP, and what sort of protection do you have over it?
So I think there's three parts to what we do. We like to suck data in from lots of different places. And of course, at the other end, we push it all out into the dashboard. But the bit that's really interesting is what happens in the middle. And that's where we're trying to add as much insight as we can by blending things together, by looking for trends, by learning techniques around the data and clustering and all sorts of things. That stuff is really, really tricky. It takes a lot of research, a lot of time spent in the museum, and we believe very protectable as well. And that's where our clients are really interested. I was just at the Museum Computer Network last week, and I now have a list of, as long as my arm, of new things that we need to build into that layer. So that's where we see our very unique proposition and our ability to compete.
What's your growth and exit strategy?
Sure. So very much our focus is getting power through a niche market. And our objective in the end is to be able to exit with the potential to replicate this through somebody who's got a sales network in multiple verticals. I've got about 5 seconds left, so I can't tell you who that is. But out of time, saved by the bell.
Expertly timed. Well done, Angie. Give her a round of applause.
Thank you.
The second finalist to pitch is Ben Lynch. He is the founder of Jude. 6 minutes on the clock, please. Ben, your time starts now.
Thank you. I'm Ben, and I'm the founder and father of Jude. Now, Jude is my 4-year-old son, and like most 4-year-old boys, whenever he earns some pocket money, he wants to immediately spend every dollar of it on anything and everything Star Wars. More often than not, though, $5 for setting the table and not whacking his sister around the head with a lightsaber for a whole day isn't enough to buy anything. So I tell him he'll have to dip into his piggy bank. Now, I can see in his piggy bank he's got around $50, so I know he's good for it, even though I can't actually prize that money out at this moment in time. So we head off down to the shops, and Jude selects some more Darth Vader Lego for around $10. So he hands over his pocket money of $5, and I give him the balance of $5, knowing I can get it from his piggy bank later. So once we get home, I go straight to his piggy bank and I withdraw, aka smash it, and take $15. Now remember, Jude is 4, but even he knows that 5 plus 5 equals 10. So usually at this point, he'll whack me around the head with his lightsaber and start crying. Unarranged overdraft fees, I tell him. Welcome to the real world, son. Now, after about the 10th whack to the head, I have an idea. So I'm an ex-developer at Xero, and being naturally curious and or heavily concussed, I thought it would be a great idea to build my own banking experience over top of all the banks I bank with and how I want to do it. How hard can that be, right? You guys have open APIs, right? Looking back, I think I was concussed. Banking the experience, I thought, should become much more front-end focused. The ability to engage, to delight and surprise customers, I think, will soon become the only differentiator in the entire process. So I started looking at 3 main experiences I could improve for my life. I thought, what would be better than pulling out my phone, unlocking it, finding one of my banking apps, then checking my balance up to, say, 10 times a day. Having someone tell me the instant my balance changes. And what would be better than, say, drifting a few dollars into overdraft, then having my bank take up to, say, 10, 20, 15, 10, 15 or $20 in overdraft fees, leaving me feeling like I've been whacked around the head with a proverbial lightsaber. Having someone move money around my accounts automatically when required. That someone would be kind of like a private banker, someone to help me manage my day-to-day finances, someone I could trust. That someone is what I built. That someone is Jude. Let me introduce you. I can get hold of him anytime I want. He's already there in the places I already know and love, places like Facebook Messenger. I can simply ask Jude about my everyday banking needs, stuff like, what's my balance? And wouldn't it be cool if he could also notify me when someone gets paid? Or remember I said it would be better if someone could just tell me when my balance changes. Jude can do that for you, just ask. You know, I need to transfer some money around. Jude, can you do that? Sure, where to? Now, I don't know about you, but I always forget to pay my phone bill and it costs me considerably more in late fees. Jude, can you pay that for me too? Sure can. So for myself and a small group of private users, Jude has now become our primary financial relationship. We don't guess if we've been paid. We don't guess our balance. We don't guess anything. Jude tells us. And better yet, Jude actually saves us money. No more overdraft fees, and Jude actually figured out I was paying car insurance for a car I hadn't owned in 3 years. You see, saving people money has been the driving force behind some of the biggest consumer wins of the internet era. Think about it, Uber, Airbnb, Netflix and Amazon, you get more for less. It's the painkiller of the mass market. And saving people money extends beyond how we spend our money, but also how we manage our money, or for many of us, our debts. Now, Jude recently won the Consumer API category of the Visa Everywhere initiative over in Australia. And ultimately, I see a future where we as consumers, we interact with brands and businesses at a much more personalised and customised level. We'll do it in a much more natural way, and we'll do it from the places we already know and love. You can come and meet Jude right now. Head on over to hey.jude.io and say hi. Jude will set you up with some demo bank accounts and you can get a glimpse of what we think the future banking experience looks like. We're working with banks both here and in Australia on securely connecting you to your accounts. And sure, like anything new and anything worth doing, there's a few borders and obstacles in our way. But to me, these can only do one of two things. They can stop you in your tracks or they can force you to get creative. And they've forced me to rely on my imagination and to believe in the possibilities. Imagine what else Jude could do. I believe we're only just getting started. Thank you.
Hey Jude, I see what you did there.
Hey.
All right, let's reset the clock at 4 minutes. Judges, over to you.
Thanks, Ben. Fantastic presentation. Can you tell us what's been really hard in building Jude, i.e. what's going to be hard for someone else to replicate? What's the hard thing?
Getting access to the data is obviously super hard. So I had to build my own Yodlee as such over top of all New Zealand banks. And so that screen scraping doesn't scale. But if you look at, we've heard today the PSD2 and the CMA in the UK, it's pretty obvious this stuff is coming. And it's whether we're forced to or whether we agree as an industry on what this open banking platform looks like, this sort of stuff can thrive. And so obviously getting access to that data is a huge hurdle. And the way I've done it now technically breaks your banking terms and conditions. But that's fine because I only built it so I could get in front of the banks and to push these sorts of products to then say, if we build this platform, it's just a case of switching where the data comes from once we've got it built.
Very good.
Great presentation. Hey, how much time have you spent with customers looking at whether they like this and what they want to use it for?
Yeah, so originally, I literally built this while I used to work at Xero. And I originally built it to stop myself from being charged unarranged overdraft fees, which I think the customers certainly, or consumers, millennials and younger, certainly that's a pain point for them. And I mean, that's quite an easy problem to solve, but if you think about the application of the technology outside of that, I think for me, banking has always been too much pull and not enough push. So really that's what it's about, is pushing notifications and insights, and much like a private banker would do, to customers. So obviously it's kind of hard to validate in some sense because we don't have access to the data in the first point. So that's why we built the screen scraping engine as such, to do it to a small group of users so we can start validating and then start thinking about what are some of the pain points we can solve. Because there's plenty of pain points to solve in banking, it's just which one do we want to choose first.
So it sounds great, you're sort of Siri for banking, right? But the question is, how do you get paid?
Yep, so ultimately there's a couple of ways we're doing it at the moment. So we're working with a lot of the banks, both here in New Zealand and Australia, about building Jude prototypes for them inside their own systems. So basically I'm getting paid as a consultant to do that, because ultimately we need all these bots or Siri networks to talk to each other. And so Jude might ultimately be a thing that talks to, if you have multiple bank accounts, which about 50% of the population do, then maybe you'll do your banking through Jude. If you just bank with, say, ASB, then you might talk directly to the ASB bot. But Jude might be the one that pulls all the merchant data together. It's really a platform as a service play.
So you're expecting the banks will pay for this. So if I'm the consumer, you're expecting that the banks
No.
will pay for me to
So
have
Jude would
this.
be a typical subscription type. So you might pay a Netflix type amount to have someone manage your accounts, to manage all that sort of stuff, and basically private banking at scale. Pay your bills, do all that sort of stuff for you, whilst hopefully saving you more money than you actually pay for that monthly subscription.
And then do you want to talk a little bit just about your acquisition model, your sales model? How do you get scale?
Yeah, so we've got plenty of options what we do. We can either go down the route of partnering with a bank and then using that as a channel, which is a great option. Or, at the moment we're kind of playing the game across multiple banks and thinking, how can we do it? Ultimately the customer would have a better experience if it worked across multiple banks. Obviously, from a bank's point of view, it's hard to get their heads around that. But so at the moment, we're discovering which option is best for a long-term play. Thank you.
Well done, Ben, the
Thank you.
founder and father of Jude. Two impressive candidates already. Let's go on to our third finalist, who is Daniel Kieser, the Managing Director of Share Clarity. Your 6 minutes starts now.
Thank you. The share market touches all of us, whether we like it or not, through our KiwiSaver, the shares that we own, or the industries in which we operate. And yet it remains a black hole to so many of us, but it doesn't need to be. Good afternoon, everybody. My name is Daniel Kieser, and I run an online fintech company called Share Clarity. We already have operations in New Zealand and in Australia, and our aim is to improve the understanding and the participation in the share markets. And along the way, we'd also like to disrupt one of the investment banking models, but that's a little bit later. So I'd like to start by asking you to imagine yourselves in a supermarket. And have I done something there? I'd like to imagine yourselves in a supermarket, and I'd like to use that frame to describe why it is we exist. And then afterwards, I'll explain to you more about what we do. So one of the first things that we do when we go to a supermarket is we're there to look for products and foods that we want to buy, not what the sales assistant tells us to buy. The second thing we do is we don't haphazardly walk along the shelves and add products to our trolley, but we like to read what products are, we read the ingredients, we read the nutritional content. The third thing we do is we check the expiry, and the fourth thing we do is that we go along and we take similar products and we start to compare them. We compare them on price, on volume, on taste. Are they organic? Are they inorganic? And that's pretty much how we shop for anything. Cars, clothes, schools, anything but shares. And so that entire system breaks down when we think about the share market. And it breaks down because very few of us know actually what we want to look for. Okay? It's very difficult and time-consuming to go through the research proposition of finding companies that we're interested in. It's very difficult to determine the financial stability of a business, the freshness of the business, and then finally, it's very difficult to bring that all together. I actually flicked a slide when I shouldn't have. To bring that all together and be able to compare it. And so this is a global problem, and that's where we come in. That's our source of existence. And so at the very highest level, Share Clarity is the product labeling business for the share market. So we employ a team of nerds who like to research and value companies all day, every day. And we do so with all of the same rigor as the investment banks, but we publish all of our analysis for users to interact with, to explore, to change, to discuss. We cover companies of all sizes, not just the large ones like Fletcher Building and Auckland Airport, many of which are not covered by anyone else anywhere in the world. Our analyses are updated in real time and accessible in the moment, and we operate under a low-cost freemium subscription model. So you can access all of the New Zealand companies for as little as $7.95 a month. So to give you a real-world example of one of the benefits of Share Clarity, if, for example, right now Moa, the craft beer company, were to release its half-year results, within a couple of minutes, we would all be able to access Share Clarity on all of our different devices and see what impact that half-year result had on the outlook of the business and its valuation. And the alternative is, well, the alternative is nothing. And it's nothing because nobody else provides coverage on Moa. And even if the investment banks did, it would take about 24 hours for that information to eventually filter down to you. And by that time, I suspect a few people will have traded on that information. And what's neat is that already a lot of our customers are starting to see value in Share Clarity, and I would hope that everybody in this room is a potential customer of ours. But with all businesses, we have to start with a core, and our immediate target market are known as self-directed investors. So if you have an ASB securities account or an ANZ securities account, or you self-manage your KiwiSaver, like I do, or in Australia, those are self-directed investors. And what's interesting for us is that there are over 100 million of them around the world. So there are 100 million people, and they've collectively invested over $15 trillion into 30,000 companies that have no analysis whatsoever. So there's very little that they know about it. And so as a business, we've started well, and I'm proud of what we've done. The first year we went about establishing our platform, and in the last few months we've really begun to commercialize what we do. We've received a number of industry awards and accolades along the way. Obviously, the biggest endorsement is being here tonight or this afternoon and being able to chat to you. But as I say, we are a New Zealand company. We are taking a product. We found a solution to global product, and we're on our journey to try and take that to the world. Thank you.
Thank you, Dan.
Plenty of time
Now,
for questions.
a minute to spare. So let's start the clock at 4 minutes and you go for it, Mark.
First question. You might not be able to share it with us, but I'm really interested in the secret sauce. So is it bodies on the ground or machine learning? How easy is it going to be for you to scale?
It's not a secret sauce, it's probably a secret meal. But it's not so secret. So what we've done is we've applied a lot of software engineering to bring what traditional analysts use in the Excel and so forth into a database level. And then from there it's very easy, but also from the operating model, so the supply chain model of establishing companies and getting them onto the platform is also very, very fast. So to give you an example, I used to be an investment banker for ABN AMRO, and it would take me about a month to initiate coverage on a company. We can aggregate all of that information, dissect the businesses, and get them onto the platform all within a couple of days. And the reason that is because we now have over 200 companies on Share Clarity, and so you get a lot of replicability that you can use. So we think about manufacturing businesses all the same way. So we're basically just saying, okay, this is how we structure it. Then when it comes to maintaining these businesses, it's immensely quick. So this afternoon, for example, A2 Milk released its first quarter results. One of my analysts downtown literally takes a look at the report, hits the suggest a change button, it takes him to an interface where all the information's already populated, he's not having to redo that, pushes submit 5 minutes later, and then it's immediately accessible to everybody on Share Clarity, so it doesn't have to filter through that investment banker, fund manager, internal broker, external aggregator, external broker, and yourself.
So it's kind of speed to market for buy, sell, hold recommendations, essentially.
Yeah, so exactly. So we do, on Share Clarity there are valuations, and so you can filter it that way, but a lot of people look at it for yield, so they rank by yield, they rank by industry, they think of it that way.
Cool, thanks.
Does that help?
Hey, where do you draw the line between analysis and advice in the reports that you generate?
So we don't generate reports, but there's two types of advice. There's class advice, and then there's personal advice. So if I said to you, based on your circumstances and how I know your financial well-being is and the rest of your structured portfolio, I recommend you buy Share Clarity. That would be bespoke advice. But we've got Australian financial services licenses and in New Zealand, so we can actually provide class advice. But we don't specifically go out and try and tailor anything for anyone. It's basically saying we put a flag in the ground and we say this is what, at this point in time, we believe from a fundamental perspective the value of the business is. You can then go around and change that. So on Share Clarity, if you had a different perspective on oil price or a different perspective on sales growth, you could go in and change that and personalize that yourself. Yeah.
How are you acquiring your customers, and what are they paying you for what you're doing?
So that's a subscription model, a freemium subscription model. We actually do have a wholesale side of it, but acquiring customers is pretty easy. Basically there's two forms. There's direct email marketing through the Australian chat forums. So these are platforms where our self-directed investors already are, so we can hit them directly. And then the second most valuable source is lookalike audiences. So we track people who come through, they then go and purchase or register. That then creates a framework around what they like, what age, what stage, etc. And then we can go and aggregate other similar lookalike audiences. Obviously then any of the media types of articles help.
Last 7 seconds. Did you go back and have a look at your advice around what you pitched for Wynyard and Pumpkin Patch?
Yes. So
I think you've got a few more seconds because we had a mic issue. Do you want to answer that? Or is it a curly one?
I'll answer really slowly. No. On Share Clarity. So the valuation on Share Clarity on Pumpkin Patch was, if I remember correctly, it was about 6 cents, and the share price was shot up to 12 cents, and that you could have easily used it to, and all along on Share Clarity you can go to and you say what are the key risk factors. It'll tell you the debt levels, and fortunately I didn't cover the other one, but there have been some good ones.
Nice curly question, thank you. Well done,
Thank
Daniel Keezer from Share Clarity. Our next lamb to the slaughter is Sean Quincy, the founder of Genoa Pay. Welcome, Sean. If you want to start your engine.
Yes, I would.
Let's get the clock.
Well, get the going. Okay, we're going.
You're up.
There we are. Good afternoon, everybody, and obviously thanks for listening to us, fintech startups. We need all the help we can get. My name's Sean Quincy, and I'm the sole founder of Genoa Pay. And what it is, well, we have given consumers the ability to pay for what they need over time. And how we've done that, we've built a point of sale and e-commerce payment plan generator, which basically integrates with a payments provider called Debit Success to create a new payment option which can be used in retail, in a number of different service and other environments, where basically we generate a payment plan, a binding payment agreement with the individual consumer, and that's going to be through either direct debit or credit card, and they can get what they need and pay for it over time fundamentally. We've been working on the project for 4 months. I'm the sole founder. We're self-funded to this point. We launched our beta platform 2 weeks ago, and we're already looking at some very exciting trials with some major retail chains in New Zealand in 2017. So a little bit about my background and where I came, I suppose not where I came from, but where I came with the idea about Genoa Pay. Back in 2010, I was knocking on a number of companies' doors. I was very poor at the time, trying to raise a little bit of money to pay for a campaign to row from Australia to New Zealand. One of the companies I knocked on was the Transaction Services Group, a smaller company called Debit Success. I started learning a little bit about this company and fundamentally ended up taking a role with this organisation. We launched a similar payment plan type service with this company in a major New Zealand retail chain. We grew sales for that organisation across 63 stores by 20%. We moved an additional 13,000 units at an average price point of $800 because of having the payment plan option. The payment plan option solved 2 major problems I could see. The majority of consumers couldn't pay for things in full anymore. 64% of New Zealanders take home less than $584 a week into their banks. 27% live payday to payday. We also saw that fundamentally, point-of-sale finance options were slightly broken. There was an awful painful process for consumers. They asked a number of very invasive questions, And basically, they were sending consumers out of the store to come back in a few days' time with the ability to pay. So my goal then was to give businesses a tool to allow them to create payment plans at point of sale so they could effectively monetize the customer relationship over time. So to tell you a little bit, I suppose, how it works, I need to talk about something I'm pretty fond of, and that's cake. I enjoy a lot of cake, and no surprises there. But what I need to do is I need to ask the judge a couple of quick questions. Now, Cecilia, could I convince you to eat that entire cake right now? No. Could I change the flavour of the cake? Is there anything I could do to the cake to make you eat this entire cake right now?
I'm not sure it's a carrot cake, but even so, I don't.
Would you consider having a very small slice of this cake? You would consider that? Great, that's good, that worked out, that's okay. So, better go quick. Imagine the cake was the cost of a good or service. Now I'm a sales rep, I'm in store, and I'm trying to convince this person to take my good or service home. Or I'm a consumer, I'm halfway through my e-commerce process, I see the full price of a product or service, and I see the instalment price. It's pretty easy to see. I can use this as a very powerful conversion tool. Now, Genoa Pay is a tool that makes eating the cake manageable, it makes eating the cake enjoyable, and it gives retailers the power to own the customer. What we've built is a payment gateway that takes a total value and converts it into a number of payment plan options for the consumer to select from. We've then opened the door to direct debit as a payment option, giving everyone who doesn't have traditional credit cards the ability to pay for what they need over time. We then give you information about the customer that you never would have got before. So we let you own the customer, we let you remarket to that customer, we let you capture data about that customer that you can use to grow and enhance your product offering. We all know we've got nosy head offices and they want to know what's going on in your stores. They want to set growth targets, they want to set sales objectives. We give them the visibility to see what's happening in their business. Then, like any other payment solution, we need to reach the consumers where they are. Point of sale integration, e-commerce plugin, mobile application, and a virtual POS terminal is all part of our product roadmap. Relationship and data is going to be the key to any organisational success moving forward. And this next slide, I'm going to show you what a typical transaction gives to a business when it takes part. There's not much there. Typically, the consumer walks out. 9 times out of 10, consumers leave. We don't know who they are. We don't know where they live. We don't know who their next of kin is, what their driver's license number is, or anything. Cash, they walk out. You don't know anything about that person. We need to do better. We need to capture more information. You walk out of using Genoa Pay, we give you 21 pieces of data. We give you 3 tools for upselling. We give you 1 exclusive right to re-engage that customer after the payment plan is finished. Now, again, we're going to revisit cake, and I want to engage the audience a little bit here and ask you a quick question. Now, could you put your hand up if you would be willing to eat this entire cake right now? It's a very good cake. Would you be willing, put your hand up if you'd be willing to have a very small slice of this cake? That's good. All right, so I'm a retailer. By offering instalments, I just increased my accessible market by a few thousand% during that exercise. Genoa Pay, we're at a very exciting journey. Thank you for listening. Cheers.
Is Cecilia getting her slice of cake? Maybe after the judges' questions. Judges, over to you.
Vote Genoa Pay, you all get a piece.
Awesome, thank you very much.
Thank you.
So you're running this company by yourself at the moment?
Yeah, currently, very early stage, seeking co-founders and investment at the moment.
What are your plans for scaling up? How are you going to make this huge?
So basically at the moment we're doing direct-to-merchant sales, finding out what's good about our product, what's bad about our product, where the flaws are, ensuring the process is scalable. We can already process transactions in the States and in Australia, so the ability to scale across those markets is there, and though the aggregator relationship I have with Debit Success doesn't really matter if I'm processing 100,000 transactions or 10, the ability to process and manage those customers at the back end is still there. So for me, it's more of a market strategy. How am I going to sell it? How am I going to grow it? I believe it's going to still be direct to merchant through an inside sales team once I have funding. So we'll be going directly to merchants and major retail chains and asking them to use it as a competitive advantage in terms of a payment option to their customers as well.
What about your competition?
Yep, cool. Well, I guess competition, definitely traditional consumer finance comes into there as well. There are some other players emerging as well, a company Afterpay in Australia, a firm in the United States. Both of them have really dominated started focusing on the e-commerce space, whereas my, I suppose, play is offering direct debit as well and focusing on the point of sale space and using it as a conversion tool for retailers who are in store. So look, they've got a good offering. I think they've all missed an opportunity with not offering direct debit. So they're there, they exist. I feel I'm a lot more competitive than them.
You talked a little bit about the merchant proposition, but can you
Yes.
talk about the process that a consumer goes through
Yep, sure.
to get their piece of cake, and how long does that take, and particularly how do you then determine the credit risk on that
Yeah,
individual?
sure, no problem. So there's two revenue models we operate. One is a funded revenue model, one is a traditional revenue model. Funded, we take the risk. Non-funded, the merchant takes the risk. How we assess that? Well, if the merchant is willing to offer direct debit up front, then it's very hard to assess the risk on a direct debit account because it's straight from the bank. So we can operate an integration with Centrix and we can credit check that particular person. Using a credit card, we would lean on the issuer's credit check that they'd already done in terms of when they issued that card for the ability for that consumer to pay and service that payment plan. Another aspect to it is our credit control system. So whenever someone misses a payment, they receive a call, a text message and an email to renegotiate the terms of that payment plan, well not the terms, but when they might be able to pay that payment plan as well. That repeats 3 times before we potentially might send that customer to debt collection. So we have the horsepower, I suppose, to manage credit control at a scale.
So you're talking Afterpay before. Afterpay, you can go online and you can sign up as an individual before you actually press the online button. How is it for a consumer in store around POS? How long does it take?
Cool.
How many seconds is it or minutes to sign up? Do they have to do it before they go into store?
So
how does that work?
First time user, basically the purchase process combines with the joining process. So they join Genoa Pay at the same time as they're working through that initial purchase process. They can join now, or they can go and join online now, create an account, and then they just enter their email. So walk in, I want to pay for these $800 glasses with Genoa Pay. Right, 8 instalments of $80, or 10 instalments of $80. Great, enter your email. Great, you've got an account. Push submit. We email the terms and conditions to that person. Process is under 30 seconds, as opposed to traditional consumer finance, which might be 3 weeks.
So, one last question.
Oh, maybe.
Well,
Yep, I can do it.
You're the sole founder,
Yes.
right? But who else is there in the team with you?
So I use a great team of developers called Future Labs, and they're in Takapuna as well. I have a number of advisors. I work pretty closely with 3 payment aggregators, Photocash, Easy Debit and Debit Success at the moment. They've all got vested interest in this platform being successful, and they're all pretty large, successful companies. So I lean on them for advice when I need it, and see what merchants they're dealing with and how my interface might help them. Thank you very much.
Thank you very much,
Cheers.
Sean. Now welcome our 5th and final finalist to pitch. Please welcome Sam Blackmore, the founder of My Bitcoin Saver.
Good evening, ladies and gentlemen, and thanks to Payment NZ and Paymart for this opportunity tonight. I'm going to tell you about My Bitcoin Saver. We're an exciting new Bitcoin savings platform. So let me tell you a bit more. Okay, so our mission is to help people get ahead with their savings. Savings is hard. It's not going to get any easier. So there's a problem there which is worth attacking. There's 2 keys to two keys to our success. The first is Bitcoin and the second is millennials. But first, let me tell you about Bitcoin. Okay, hands up here who owns Bitcoin. Oh, there we go. There's 1 over there. There's 2. Okay, so there's a market opportunity right there in front of me. Okay, it's a digital global currency. It's decentralized. That means there's no central authority. And it's very easy to use. You could just download an app. There's many wallets that you can download off the app stores. And you can straight away receive Bitcoin or send Bitcoin. Secondly, it's millennials. So millennials are the 18 to 34-year-olds. I know there's been some talk about them today. But they are going to be the biggest consumers of financial services and products in the next 30 years. They're also known as the digital natives. So they're usually the ones you see walking along looking at their phones like this. but I think a lot of us do that these days. And they're also in debt. So a lot of students, I was a typical example, so when I finished my 4-year software engineering degree, I had $40,000 to $50,000 worth of debt. And that's a big hill to climb at the beginning of your, beginning of your career and beginning of your financial journey. Now, the options in front of most people are, fairly traditional. There's getting on the housing market and trying to get on the housing ladder, and I don't really need to go into that in Auckland at the moment, but that's pretty unattainable for a lot of young people these days. Secondly, you can look at putting some money in the bank in a savings account, but with interest rates that they are, it doesn't look like you're going to get much return on your money by putting it in a savings account. And finally, you can start looking at maybe funds or shares. And I know the barrier to entry is lower these days, but a lot of young people see funds and shares as kind of hocus pocus, and it's difficult for them to understand. So Bitcoin, let me explain how Bitcoin fits into this picture. So I became fascinated with Bitcoin from an engineering perspective initially. It's really a kind of a real evolution in distributed, large-scale, decentralized applications, and Bitcoin is really the first example of this being successfully implemented. Apart from that, I bought Bitcoin when it was about $10, and it's probably the best $10 I've ever spent because it's now worth $1,000 for each Bitcoin. Now, year to date, it has increased by 140%. I challenge anyone in this room to offer me an investment which can give me that sort of return in the last year. It has outperformed every other asset on the market. The number of transactions that are taking place on the blockchain is doubling every year. So this is a good indication of its growth. Another indication that we could look at is the number of Bitcoin wallets that are being opened. So this is doubling every year. So if we look at the two of those, the use of Bitcoin is growing exponentially. So the market cap of Bitcoin at the moment is $11 billion. Now, I know that's kind of small with some of the markets that you guys are operating in, but in 5 years' time, if it grows at the rate it's growing, that will be $100 billion. So where does my Bitcoin saver fit into this? So buying Bitcoin, so what we're trying to do is, it's an exciting new digital financial world, and we're trying to open the door as wide as possible for everyone to step through. It's difficult to buy Bitcoin, and it's almost impossible to buy it in small amounts. So what we're trying to do is allow people to buy small amounts regularly using a dollar cost average approach. So you're buying small amounts regularly in a low-risk way to catch the trend of the market. So for millennials who don't have a lump sum to invest, they can put $10 aside into Bitcoin, and they can get a better return on investment than they would in any other way. So the status of my Bitcoin saver. We've been running it for 18 months in kind of stealth mode. We've purchased 200 Bitcoins for New Zealanders at a transactional cost of $100,000. Now, with Bitcoin at $1,000 a coin now, the savings gains that our users have made are $100,000 in 18 months, and we've got about 150 users. So the future. The future is the UK for us. We're heading to the UK. There are 14 million millennials there who can use our product. The UK is a fintech hub at the moment, and regulatory, very kind of progressive in their approach to blockchain and cryptocurrencies. So we want to go global. We're having conversations with offshore banks and investors at this moment. We're talking with Techstars in Tel Aviv and Barclays Bank. We're talking with Callahan Innovation. We're looking for investment now. We're at POC, and we want to take this to a commercial product. So anybody out there can help us, please have a chat to me. We're going to do this, and we're really excited about being the next fintech success coming out of New Zealand. So thanks for listening.
Well done, Sam. All right, 4 minutes on the clock. Go for it, judges.
Sam, will you guarantee my funds that are in your Bitcoin saver account?
Well, that's the beauty of what we do, because we don't hold any funds. You hold your own funds. We deliver your funds to you, and we help you set up your wallet, but you're completely responsible for the Bitcoin that you've got yourself.
So if it goes backwards, it goes backwards.
If it goes backwards, it goes backwards, but historically it won't.
Guarantee that?
At the moment, I've said this before to a few other people at the moment, but at the moment, sterling is more volatile than Bitcoin.
So maybe just on that then, the business model for you, the revenue model?
The business model is we take 2.5% for every transaction we deliver. So it's a very simple business model, and that's all the end users need to understand. Yeah. We abstract all the other costs, which is the transactional fees, when we're transferring money overseas, the trading fees, exchange fees into other currencies and that sort of thing. They just pay 2.5% on the delivery.
So I'd be interested, what problem are you exactly solving for the millennials? Are you solving the problem that they're not very good at saving money at the moment and you're placing all your bets in Bitcoin? Or are you basically just trying to get them used to some kind of investment, and if it's not Bitcoin, it might be something else?
A little bit of both, I think. You know, we are encouraging people to save. We're trying to make it easier for them. You know, this is the idea of My Bitcoin Saver is once you set it up, it sort of happens in the background of life. So you kind of, it's a set and forget type scenario. And we're also, trying to help them benefit from Bitcoin's gains, which, as I said before, you know, they're much better than anything else that they can get their hands on. So, you know, at that sort of stage in life, you can afford to risk a little bit more. I know that a lot of people see Bitcoin as risky. Obviously, I have a little bit of a different perspective on it because I've been involved with it a lot of time. But, you know, as I said, when you're younger, you can put a little bit of your savings into Bitcoin, and other people should be thinking maybe of diversifying a little bit of their personal wealth into the world of cryptocurrency. And I think, you know, there are going to be more and more options through funds and through the traditional mechanisms with which you invest your money. People will be looking to put a little bit into either Bitcoin or other cryptocurrencies as they emerge.
So that was my question, really. Why Bitcoin? Why not one of the other currencies?
Okay, so Bitcoin is the granddaddy of cryptocurrency. So, you know, it has the massive market share. It's got all the sort of infrastructure behind it now with, you know, there's many exchanges. So the incidents that have happened in the past where an exchange has been hacked and that's affected the price of Bitcoin, that doesn't really happen anymore. If there are sort of security breaches or issues within the sort of Bitcoin ecosystem, the whole, you know, whole industry can still keep operating because there's many exchanges with which Bitcoin can be traded. But yeah, there's a new currency which is just emerged called Zcash, which is definitely worth keeping an eye on.
So why would somebody choose to do this with you and not somebody else?
Because no one does what we do just yet. There are sort of savings platforms targeting millennials, but in a traditional way, using sort of funds. So there's Stash Invest in the States, and there's also another one called Acorn. And you may have heard of Robinhood, which is another sort of platform. So everyone's trying to lower the barrier to allow them to get on board, but no one's doing it specifically with Bitcoin at the moment. So there's an opportunity.
Just following on from that, how are you going to protect this piece that you've got right now? Someone else just moves in and does exactly what you do.
We're going to be trying to move fast. That's one of the things that we kind of drew. We have a great brand, so My Bitcoin Saver's, you know, got a strong message behind it. There are going to be competitors, you know, and that's the fact of the matter. But we need only a very small team because this is a platform which can scale to sort of a huge market opportunity. So we think there's going to be enough of the cake for everybody.
Well done, Sam. Congratulations.
Thank you very much.
And actually, while you're putting your hands together, could we get a round of applause for all of our finalists? Because I think they were really impressive. And also we need to say thank you to our judges, Mark Rushworth, Stephen Korn and Cecilia Tarrant.